wasn't a good fourth quarter for RHB Bank Berhad as net profit fell by 28% due to a mix of higher impairment on loans and financing, lower non-fund-based income and higher OPEX, which was partially offset by higher net fund-based income. Net profit for the quarter clocked in at 261.2 million compared to 363.4 million in 2015, while revenue was 9.2% down to 2.56 billion compared to 2.82 billion last year. As a result, its dividend for the quarter came in at 7 cents per share, a stark difference from the 16.33 cents per share announced for the same period last year. The numbers were slightly better for its full-year report card, with net profit for FY16 registering 1.2% higher at 1.68 billion, even as revenue came down slightly by 1.9% to 10.57 billion. Group MD Datuk Khairul Ali Ramli said that even as the challenging operating environment has affected its numbers, its balance sheet remains strong, explaining that the bank is still in a good position to drive value creation, especially from its key businesses and segments, as it continues to manage asset quality and focus on operational efficiency. AMMB Holdings Berhad saw an uptick of 4.3% in earnings for its third quarter of FY 2017, even as net interest income came in lower, as did the Islamic banking business and higher OPEX. However, this was mitigated somewhat by write-backs on impairment loans, advances and financing, and higher other operating income, among others. Net profit came in at 313.2 million ringgit compared to 300.2 million the year before. In contrast, revenue came in 6.6% lower at 1.98 billion compared to 2.12 billion last year. On the outlook for the banking industry, CEO Datuk Sulaiman Muhammad Tahir said that the sector is expected to see slower loans and deposit growth, in line with moderate GDP growth, but adds that the bank continues to see pockets of opportunities in the market, specifically the SME sector, which has managed to outpace GDP growth since 2005. Global law firm Hogan Lovells says that foreign investor confidence in the country has been dented, and the main reason for it? Troubled state fund 1MDB. In its 2016 Global Bribery and Corruption Review report, Hogan Lovells said that key performance indicators showed that Malaysia's economy had been affected by the corruption allegations, driving the point home that the doubt on transparency made it hard to confidently do business in Malaysia. According to the law firm, the Malaysian authorities' inability to find any wrongdoing in the 1MDB probe has not stopped regulators in Singapore, Switzerland, the US and the UK from conducting their own investigations. As such, foreign investors in sectors like manufacturing and oil and gas have been affected. Malaysia has indicated its commitment in cooperating with international regulators in their probes. It was a sterling second quarter for Ekovest Berhad as earnings leaped by 561% due to higher contributions from the construction segment for Duke Phase 2 and the commencement of works on the Setiawangsa Pattaya Expressway or SPE. Net profit was 41 million compared to 6.2 million last year. Revenue, meanwhile, was almost 50% higher at 275 million. The previous year, the figure had stood at 183.6 million. Looking ahead, the group is expecting the ongoing construction of Duke Phase 2, toll revenue and recognition of unbilled sales from property development to contribute to its profitability for the current financial year. An added kick will also come from the recently awarded master contract for the SPE, which carries a price tag of 3.96 billion. Ekovest major shareholders include Executive Chairman Tan Sri Lim Kang Ho, who holds 20.19%, and Datuk Haris Onn Hussein, brother of Defence Minister Datuk Sri Hishamuddin Hussein, who holds 20.16%. Condom manufacturer Carex Berhad saw net profit for its second quarter drop by more than half as a result of higher distribution and marketing expenses as well as one-off expenses. Net profit was an even 10 million compared to 22.6 million last year, while revenue just inched up by 1% to 97.6 million from 96.6 million. However, despite the steep drop, the company says it is optimistic for the rest of FY 2017 due to the continuous strong demand of its existing and own brand products.